The financial statements released for Mandatum OYJ, covering the final quarter of 2025 and the full fiscal year for 2025, represents a period in the company's post-demerger history. These results provide a view of the pivot toward a capital-light business model while managing the complexities of a legacy with-profit insurance portfolio. Despite the strong strategic progress, Mandatum faces several headwinds and risks identified in the financial statements and market reactions. Actuarial and finance volatility. The group's statutory results remain susceptible to volatility from factors outside the core business operations. The fourth quarter profit miss was partly due to higher overheads and changes in actuarial assumptions that weakened the other result line. These assumption updates are a regular part of the insurance industry, but can create noise in quarterly reporting that obscures the steady growth of the fee business.
Net flow pressure in alternative investments. While the 10% annual growth in client AUM is positive, the 64% decline in Q4 net flows highlights a potential vulnerability. The concentration of Mandatum's alternative asset portfolio among large institutional clients means that a few significant distributions can offset strong retail and corporate sales. Maintaining consistent positive net flows will require a broader and more diverse client base to mitigate the impact of individual client lifecycle decisions. Valuation and analyst expectations. Market reactions to the report were mixed. Analysts at Inderes noted that the dividend proposal of €85 was more moderate than their expectation of €1. Furthermore, the statutory profit of €30.3 million was 36% below the Inderes estimate of €47.5 million. Although the miss was driven by balance sheet volatility rather than a deterioration in the fee business, it highlights that Mandatum must consistently deliver strong statutory results to justify its high valuation premium relative to its book value and Nordic peers.
The reporting of Mandatum's 2025 fiscal year underscores several structural strengths that support a positive long-term outlook for the company. Qualitative shift in earnings. The most significant positive takeaway is the step change in the quality of earnings. Mandatum is no longer an insurance company that manages assets. It is an asset manager that manages a legacy insurance book. For the first time, the solvency capital requirement for the capital-light business is now greater than that of the with-profit business. This indicates that the transition to a high ROE fee-based business is structurally complete, and future growth will be driven by the less volatile and more capital-efficient segments. Operational leverage and scalability. The reduction of the cost/income ratio to 49% is a critical achievement. It demonstrates that Mandatum can expand its international footprint and grow its AUM without incurring a linear increase in costs. As IT costs continue to decline following the mainframe migration, Mandatum has a clear cost to exceeding its profitability targets. Market recognition. The successful launch of MAM Credit Opportunities 2 with over €200 million in initial commitments proves that the group can successfully bring sophisticated, high-margin alternative products to market.
Part 2. Summary of fourth quarter and full year 2025 performance. Mandatum's performance in the fourth quarter of 2025 was characterized by a distinct divergence between statutory profit figures and the underlying health of its core growth segments. Profit before taxes for the period decreased by 14% to €30.3 million compared to €35.1 million in the fourth quarter of 2024. This decline was largely technical in nature, driven by a lower net finance result and a decrease in the other result line item, which was impacted by periodic updates to actuarial assumptions. In sharp contrast, the capital-light business, which Mandatum defines as its strategic focus area, delivered a profit before taxes of €26.8 million in the fourth quarter, representing a 28% increase year-over-year. This performance highlights the high operating leverage inherent in the asset and wealth management business, where fee income growth is currently outstripping cost growth.
The full-year results mirror this narrative. While the group-wide profit before taxes fell by 10% to €182.1 million, it is critical to note that the comparison period of 2024 included a $10.6 million contribution from an insurance portfolio sale to IF, which created a high base effect. Adjusting for such one-offs, the underlying earnings quality has improved, as evidenced by a 21% increase in the fee result over the 12-month period. The strategic pivot toward capital-light operations is visible across all three of Mandatum's primary business areas: institutional and wealth management, corporate, and retail. The group's ability to maintain high retention rates while attracting new capital in a competitive Nordic environment suggests that its product offering and brand value remain robust. This segment remains the most significant driver of value for Mandatum. In 2025, private wealth management assets under management, or AUM, grew by 19%, supported by strong sales of discretionary mandates. Discretionary management is particularly attractive from a margin perspective, as it allows for stable fee structures and deepens the client relationship.
International expansion has transitioned from a strategic objective to a tangible contributor to earnings. Mandatum reported that its international asset management business saw an 11% year-on-year increase in AUM. This growth was particularly pronounced in Sweden, where Mandatum has established a credible presence, as well as in Central European markets. The competitive appeal of Mandatum's fixed income products was highlighted by the Mandatum Fixed Income Total Return Fund winning the Scope Award 2026 for Best Bond Global Aggregate Euro in Germany. The fourth quarter net flow of 141 million euros was lower than the exceptionally high comparison figure of 392 million euros in 2024. Management attributed this decline to a small number of large distributions from alternative investment products, which occurred despite strong underlying sales in other categories. This volatility in net flows is a characteristic of institutional asset management, where specific client distributions in private equity or real estate funds can skew quarterly figures.
The corporate segment continues to leverage Mandatum's market-leading position in supplementary pensions and personnel funds. This business area benefits from high levels of recurring income and extremely strong customer loyalty. In 2025, corporate client satisfaction reached a Net Promoter Score of 88.5, which is among the highest in the Nordic financial sector. Corporate net flows increased significantly during the year, highlighting the segment's role as a stable foundation for the group. The retail segment has been revitalized through distribution partnerships, most notably with Pohjantathi Mutual Insurance Company. This cooperation has successfully driven sales of risk life insurance products, although management noted that retail sales fell slightly short of their highly ambitious internal targets for the year. Retail customer satisfaction also improved, with an NPS of 75.4 at year-end. Mandatum is managing its cost base while growing its revenue-generating assets. The cost-to-income ratio related to client AUM improved from 58% in 2024 to 49% in 2025. This 9 percentage point improvement is a testament to the scalability of Mandatum's platform. As client assets increase, the fixed costs of management do not rise in proportion.
The end of the innovation tax. A critical component of Mandatum's long-term efficiency strategy is the elimination of its legacy mainframe system, scheduled for May 2026. In the financial services sector, maintaining legacy mainframes is often described as an innovation tax, where a disproportionate share of the IT budget is spent simply on maintaining obsolete hardware and COBOL-based software, rather than developing new customer-facing digital services. The retirement of the mainframe will address the talent cliff risk, the challenge of finding specialized engineers to maintain aging systems, and is expected to lower annual maintenance fees by double-digit percentages. By transitioning to cloud-native or modern server architectures, Mandatum is positioning itself to be more agile than many of its larger, more complex Nordic peers. Capital management and shareholder returns. Mandatum's financial results are increasingly judged on its ability to generate organic capital and distribute it to shareholders. In 2025, organic capital generation reached 301 million euros after taxes, or 0.60 euros per share. This significantly exceeded the reported IFRS net result and provides the fundamental backing for the group's generous dividend policy. The board of directors has proposed a dividend of euro 0.85 per share for the fiscal year 2025. This represents a substantial increase from the euro 0.66 paid for 2024 and signals management's confidence in the stability of capital generation. This proposal is part of Mandatum's strategic goal to return over 1 billion euro to shareholders during the 2025-2028 strategy period. The Solvency II ratio of 169% without transitional measures sits at the midpoint of the company's target range of 160-180%. While this is a decrease from the 193% reported at year-end 2024, it reflects the deliberate distribution of excess capital.
The Saxo Bank catalyst. The solvency ratio is poised for a significant rebound in early 2026 upon the completion of the sale of Mandatum's stake in Saxo Bank. This transaction is estimated to have a positive impact of between 30 and 34 percentage points on the Solvency II ratio.
In January 2026, Danish regulators imposed a DKK 313 million administrative fine on Saxo Bank related to anti-money laundering inspections. While the inspection found no evidence of money laundering, an indemnity mechanism in the sales agreement resulted in an EUR 8 million downward adjustment to the purchase price Mandatum will receive. Mandatum expects the final purchase price to be approximately EUR 311 million, with completion still targeted for the first half of 2026. This capital release will provide the group with significant flexibility for further distributions or strategic acquisitions. Net finance result and balance sheet de-risking. The net finance result for the fourth quarter of 2025 was EUR 18.8 million, down from EUR 23.7 million in the previous year. This decrease was expected, as the 2024 comparison period included a unique EUR 16 million dividend from Saxo Bank. Excluding that one-off, the finance result was relatively stable, though investment returns on the group's original portfolio were slightly pressured by rising interest rates, which affected the market value of credit instruments. Mandatum has continued its commitment to reducing investment risk on its own balance sheet. In the fourth quarter, the group sold a real estate seed portfolio for EUR 26 million, reducing the proportion of real estate investments on its balance sheet from 3% to 2%. While this sale resulted in a one-off negative impact of EUR 4.5 million on the Q4 result, it lowers future capital requirements and reduces volatility in the group's finance result.
An analysis of Mandatum must consider the performance of its Nordic peers during the same period. Financial institutions across the region reported strong 2025 results, providing context for Mandatum's competitive position. Mandatum's AUM growth of 10% is healthy, but slightly lags behind Nordea, 13%, and Danske Bank, 16%, which may benefit from larger retail distribution networks in Denmark and Sweden. However, Mandatum's focus on high-margin discretionary wealth management and corporate products allows it to maintain a cost-to-income ratio that is competitive with these larger, more diversified banking groups. Conclusion. The core investment thesis for Mandatum rests on its ability to generate high levels of organic capital, 0.60 per share, which significantly exceeds its IFRS earnings. The group's strong position in the Finnish corporate market and its burgeoning presence in the Swedish wealth management sector provide a platform for sustainable AUM growth. Investors should closely monitor the completion of the Saxo Bank sale, as it will likely be the catalyst for the next phase of capital distribution.